10 FCR violations that can get you paid. So welcome. If you're tuned in to the live call, salute to you. You heard it here first. If you're tuned into the replay, salute to you as well, because it's not too late. This is something that has been a thing for a long time. I just needed the right vehicle to help people in this way that I'm able to help you today. So what do I mean about the top 10 ways that you can get paid from FCRA violations? So let's start at the beginning. FCRA, that stands for the Fair Credit Reporting Act. Now, what that means is there's a fair way that these consumer reporting agencies are supposed to report in a way that respects and protects your information as well as your rights. But a lot of times these entities are not reporting in the correct manner. So what was created was the FCRA, which is a Fair Credit Reporting Act, to protect consumers, protect people like you and I, to make sure that these big boys, these big entities, were not taking advantage of people, because in many cases they do. Well, if they don't do what they're supposed to do, then that's a violation. I'm gonna go over the top 10 violations that can get you paid, but there are several violations. But these right here, I'm sure many of you can resonate with. If not, you know somebody who can resonate with this. Now, with us being in the credit restoration business for the past 10 years, we know that a lot of times people have less than ideal credit due to errors. When I say a lot of people, I mean millions of people have errors on their report. And if they have errors on their report, meaning some information is being reported inaccurately, it's outdated, it's unverifiable, then in many cases, that's grounds for removal. But not only that is it grounds for removal, it also can be grounds for a lawsuit. So I've seen tons of credit report, and there was times where I wish I could help them from an angle of getting them a win in terms of using the FCRA and showing where their violations have, been, or showing where their rights have been violated, and then from there getting them paid. But what I was able to do was help them clean up their report, get certain things deleted off of their report, help to boost their score. But what if you can get both? What if you can get some things cleaned up, some deletions, your score increased, and they have to cut you a check? And what if I told you that they can cut you a check anywhere from $1,000 to 2.5K? So anywhere from $1,000 to $2,500 in many cases, depending on your situation. That's what this training is all about. So these top 10 ways, if they have violated your rights, then you can get a win of $1,000+ or $2,000+, all from just having the right information and being plugged in to what I'm going to share at the very end. So stick around all the way to the end, because that's where I'm going to give the sauce. That's where I'm going to tell you what's the next thing you need to do to see if you qualify for the FCRA violation that can get you paid. Not everybody does, but a lot of people do. I've seen a lot of reports, so I know that to be true. So let's keep going. Now, let's start with number one of the top 10 FCRA violations that can get you paid. Number one is credit report shows balance due on a settled or paid account. Now, I know this happens a lot. I've seen it on clients just about every day. And what this means is if it's a balance that was paid, but it's still, or if it's an account that was paid, but it's still showing a balance, then that's a FCRA violation. If it was a account that was settled, but it's still showing as if it has an active balance, then it's a FCRA violation. So a paid or settled account should report a zero balance. Many people have this issue on their credit report. And that's one of the things that they may not know, but this can qualify them to get $1,000 or up to $2,500 just off of this error. And this is just number one. So I know this is a common one that fits the narrative of many people all over the nation. And I've worked with several, but not near as many as I feel I need to expose to this information, because that can be a nice boost, a nice lump sum, a nice surprise amount of money that came to you just by an error that was on your report or them not properly following the FCRA. So the documentation that will be needed in order to pretty much justify this error is a settlement letter, payment confirmation, meaning that you prove that you pay. Hey, this is where I made the payment, or this is the settlement letter that I received, or bank statements showing payments, etc. So anything on your end that can show, hey, this was settled, it just didn't show or update properly inside of the system, that would be the type of documentation that you would need to provide. Very important. Now, this is all going and taking a legal route, and I show you at the end how you can get tapped in so we can make this a win-win for you without you having to worry about all of the details. I just want you to know it exists so you can have an idea of what may or may not put you in a position to use the FCRA violations to your advantage. But I'm going to position it so that you don't have to worry about doing the heavy lifting or memorizing all of these codes or rules or things of that nature. I just want you to be aware of it so you can understand how simple and how easy and how likely it is for these items to be applicable to you. Number 2, a report shows a balance after the creditor discharged the debt with the 1099-C. When a creditor issues a 1099-C, they have discharged a debt you owe them, and it should report on your credit report as a zero balance. Now, this is what's known as a charge-off. A charge-off is basically when they discharge the debt, and in many cases, they take a tax deduction. But it's not officially discharged unless they've issued out a 1099-C. So both have to be true in many cases. So this is not just to say, oh, this charge-off is here and it shows that I have a balance. It doesn't show a zero balance. You want to make sure that the 1090-C has been issued out. Typically, they do this towards the beginning of the year before April 15th. If they're going to do a discharge of the debt, they're taking it as a loss, basically. They wrote it off on their taxes, and they issue you out a 1099-C, which is basically saying, or it shows up as income on your end, but a tax deduction on their end. You don't have to worry about knowing that. But if you've ever received a 1099-C from a cancellation of debt, which is what a 1099-C is, and many times you'll see this when it comes to different loans or student loans, if it's still showing a balance or that balance is not zero, then that's an FCRA violation that can get you paid. That's number 2. Let's keep going. Number 3, duplicate accounts on the credit report. This is a very common one as well. So a duplicate accounts can only appear on your credit report one time. So it's pretty self-explanatory. If you see an account, it's on there more than once, same account name, same balance. It's not that you owe $555 2 separate times. No, you owed it one time, but they just had poor records. And their records reflected that account twice with the same amount. That, my friend, is a duplicate account. Another FCRA violation that can position you to get the $1,000+ that we talked about. So this is a common one across the board. There's millions of people who have duplicate accounts that they don't know can get them paid. That they don't know is not only dragging or hurting their score because it looks like they owe a little bit more debt than they do, or depending on the amount, it looks like they owe a lot more debt. Imagine a $10,000 debt being reported twice. So now it looks like you owe $20,000, when in all actuality, they made a mistake and it was only $10,000. So there's grounds for removal. This can really cause a negative impact on your credit report, on your credit score, on your debt to income ratio, but this can also get you compensated because it is a violation. Number 4, debt buyer and original creditor both reporting a balance due. This is similar to a duplicate account, but I'll let you know the difference. So the debt buyer can begin reporting a balance, but the original creditor must stop. They can't both report the debt as due at the same time. So this is what will be known as a collection. So if somebody buys the debt from the original creditor, that's pretty much what collection companies do. They find a bulk of accounts that may have defaulted and they're willing to buy it. And that way, that creditor, they're at least getting something for the information that they have. So they sell it for a certain amount. And now this debt collector can report it on your credit report. However, the original creditor must stop reporting. So that way, that account is not being reported twice. I can't tell you how many times I've seen a collection company reporting and the original creditor reporting. If both of them are reporting, it's very similar to a duplicate account, but it's still a violation of your FCRA because you have the debt buyer and the original creditor both reporting a balance due. This is a common one as well, and I know it to be true. Let's keep going. Number 5, unknown account on your report. If you have an account on your credit report that you don't recognize, it could be identity theft or someone else's account. So if it's an account that you do not recognize, the reason why it's a form of identity theft is because some kind of way an account ended up on your report that was not yours. Now, it might not be identity theft how you may think of it initially, which is, okay, somebody stole your identity and used your information and tried to open up accounts and swipe credit cards, etc. But identity theft has many different forms. And it took me a while of going down the rabbit hole to realize, oh, identity theft is not just somebody just stealing your wallet and now they use your information and did XYZ. No, identity theft could be some of these entities improperly using your data and opening up some certain accounts, or improperly leaking certain information, breaching your data, and certain accounts get open, or certain accounts get modified without your knowing, beyond your consent. Those are different forms of identity theft. It could be identity theft literally, or identity theft by modification, as I call it. Basically, they modified the account without your knowing. So this is why you want to handle it in a certain way, because it's trained eyes who can look and see, oh, it is a form of identity theft, which led to this unknown account that they do not recognize. In many cases, it can be a collection company. You didn't go into an agreement with that company, but it's showing up on your account. So of course you don't understand or know who this entity is, Portfolio Recovery. You never signed an agreement with them. Of course you don't know who this entity is when you see Midland, Credit. You never signed an agreement with them. So some of those things can trigger a potential form of an unknown account on your report. But with trained eyes, people who practice law, consumer law, and have been doing it for years, this positions you to win against them in this FCRA violation that they have committed. The documentation that would be needed for this, for identity theft, would be an FTC identity theft affidavit, which is not hard to come by, or a police report. FTC identity theft affidavit is easy to do. And of course, it'll be legal entities that'll be helping you go through this if this fits your scenario. So don't worry about having to figure it out, not knowing what to do. Your hand will be held throughout this entire duration. Number 6, short sale listed as foreclosure. So this is not a common one, but it definitely happens. Now, well, it's not common based on what I've seen. I'm sure it's common because it's the top 10 ones that can, get you qualified for winning a case against the FCRA, or them violating your FCRA rights. But the short sale is basically, a form of or method to which sometimes a house may be sold. But sometimes it may show up in the records as a foreclosure. So after a short sale, the mortgage account should report as a short sale, not as a foreclosure. So sometimes they may report it as a foreclosure when that indeed wasn't what it was. So if that's the case, another violation. So I need you to get that in your mind. It's not a matter of you feeling like they reported something accurately every single time just because these are big companies and a lot of times you fear Experian, you fear Equifax, you fear TransUnion, you're scared to go at them. No, these are businesses, for-profit businesses that profit off of reporting our data, sharing information. So they make mistakes as well. So be okay with holding them accountable when it comes to things like this, because this could very well be your situation or someone that you know. And it's important for you to share this with them. So once this is made public, of course, you can share this with them and see if they fit into any of these categories or think they do. And then even if they're not sure and they just want to know, then they'll learn how they can do that right at the end. So the documentation that would need to be provided for this will be a foreclosure or a short sale or the short sale document. So if the person had a short sale, then all they got to do is provide the documents, and that'll automatically contest or prove that the foreclosure didn't exist. It was a short sale, not a foreclosure. Two different things, and they affect your score in different ways. A short sale on your report doesn't really have an impact, but a foreclosure on your report, that's damaging. So that leads to multiple damages, which is how you get more than $1,000 if it's damages on top of damages that take place due to the fact that their improper reporting led to a foreclosure, led to a score drop, led to interest rate being charged more than it should be because now your poor credit is costing you more money. Those are damages on top of damages, all because of their poor reporting. Very important. Number 7, Debt discharged in bankruptcy, reporting a balance due. So a debt being discharged in a bankruptcy should not report a balance. After bankruptcy discharge, accounts should have a zero balance. The documentation you will need here is the documentation that shows your bankruptcy discharge. Now, I do want to make this clear. A discharge is different from a dismissal. So a debt being dismissed, the person still has some tie to that bankruptcy. They still have some tie to the debt per se because they still owe it. It's just been dismissed. So they still have ties to the debt. But a debt being discharged should have a zero balance because they no longer owe it because that account was discharged. They no longer can charge you for that account. And as a result, that balance should be zero. And if it does not have a zero balance, boom, FCRA violation. So this is another one that's pretty common. I've seen people who have bankruptcies and they say, hey, it was discharged. It was discharged. It was discharged. Now, if it was dismissed, that's different. But discharge is something that I've seen. And as a result of it, they may owe you some money. Number 8, account too old to report. So this is when you get to dealing with statute of limitations and things of that nature. But negative accounts must be removed after 7 years. So if negative accounts are on your profile beyond 7 years, especially if you didn't open up a new can of worms and start paying them, within the 7-year the 7-year time frame as they try to get you to do, this qualifies as an old account. This happens all the time as well. A negative account that's beyond 7 years should be removed. And this is even biblical. You can even break it down to where the 7-year time frame is where all men should be excused of their debts. This is applicable to your credit report. And if it's still on there and it's negative and it's beyond that 7-year mark, that's a violation. I don't care if it was 7 years and 3 months. It's a violation. I don't care if it was 8 years. Violation. So this is a common situation that I want you to know about so you can use it to your advantage. Number 9, your information is mixed with someone else's information on your report. Listen close. Happens with junior, senior, thirds, or with common last names. Only your information should be on your credit report. This happens a lot. To where they're like, yeah, they got me tied up with this person and that person. I don't know who that is, or that's my dad, or that's my parent, or that's my grandfather. So it get mixed up all the time. That's not your fault. That's their fault. So they have to pay for that. That's a violation because your information shouldn't get mixed up. They should have so many data points that they should know the difference between you and your dad, you and your grandfather. Birthday alone says that you can't be that same person. So they should have their ducks in a row. It's up to them to have proper record keeping. So the burden of proof is on them, not on you. So this is something that is common as well, especially with men. So a lot of you probably got men in your family who are junior, seniors, the third. Guess what? You need to share this video with them because there's a good chance they have some things on their report that is inaccurate. And guess what? If junior got it on his report, senior probably got it on his too. If the third got it on his report, junior and senior probably got it on theirs too. That means all 3 of them can benefit from this information just because the consumer reporting agencies made a mistake. So if they made a mistake, they have a price to pay. Very important. Number 10, authorized users report show all user activity, not just authorized users. Only your activity should report on your credit report. The documentation that will need to be provided in this situation is the credit reports and possible card statements showing you as the authorized user. So if you're being shown as the authorized user, okay, that's proof that the whole account is not yours. You're just an authorized user. Now, with the authorized user being added on the credit profile, that is a good strategy to help you build and boost your credit. However, in that authorized user scenario, they have the option to issue you out a card. If you have a card and you start using the card, those transactions from your use of the card that was issued out to you, those are the ones that are supposed to be reported. That's the activity that should show. Not any and all pieces of the activity from the original owner of the account. That's kind of invasive anyway. Like the person who signed you up as an authorized user don't necessarily want you to see all of their, information or things being reported per se. So the fact that their user activity is showing up on your report, that's a violation. And that's another violation that can get you paid. Now, the FCRA is a long list of things or, codes. So it's more than just these 10. I just wanted to get your feet wet so you can understand that these are some simple ones that you probably have going on your profile right now. And I'm going to show you how we can find out if this fits you. And if so, then congratulations, you may have a payday in your future to the tune of $1,200. So let's keep going, and I'll let you know how we can go about making this a reality for you. So who wants to get paid $1,000 to $2,500 for FCRA violations on your credit report? Say me in the comments, and I'll tell you how we can get the ball rolling. Say me in the comments if that's you. Now, if it's just me who's excited about this information, then I'm okay with it because I'm going to share it with somebody else who is excited. But if you know that you wouldn't mind having access to this type of information, drop a me in the chat, and I'll show you what you can do in order to get access to this information. Perfect. That's all I needed to see was one me, minimum. And if you're watching a replay, you do the same thing. But I'm going to show you on the next slide exactly what you need to do. So what we've done with us being in the credit restoration and financial literacy space for some years, this was something I was wanting to piece together because I knew I didn't want to take on consumer law and become an attorney or become a lawyer. However, I wanted to play my role in helping people and also position people in a seamless manner to get the business taken care of. And apologies for that overlap on the screen. But what we've done is partner directly with a law firm that has a track record of, it reset. Let me get back to that main screen. They have a track record of winning over 70 million. And this was back in last year. They probably haven't even updated the amount for 2025. But we partner directly with a law firm that has won over $70 million in litigations. And what we can do is have you to submit your information, or we'll basically submit your information to all 3 credit bureaus on your behalf to challenge any accounts found to be in violation of your FCRA rights. If successful, you could win $1,000 to $2,500. And say win as if it's like a contest, but no, you win the litigation because there would be a lawsuit that would have to take place. That being said, all you have to do is text FCRA to 501-744-3866. That's my direct line. Text FCRA to 501-744-3866. And this is what I do. What I do is I send you the next steps. It's simple, 1, 2, 3. You follow those steps. I submit your information and see if you are amongst those who qualify, which many people do. Even if you are not sure, you don't think you fit whatever the top 10 items were, it still may be worth your time to do it because you never know. You got trained eyes who are going to look at it and say, okay, no, this is a violation, or this is what you may not be looking at. And if we see that it's a great chance of you winning, then we'll get you connected so you can go through and provide whatever documentation is necessary. Now, this is at no cost to you. And this is what I love, and this is what I wanted. I wanted it to not cost the people that I expose you to anything out of pocket initially. Because sometimes, it just doesn't make sense in this scenario for a person to be out of a large amount in hopes they're going to win. See, they're not even going to take you on as a client unless they know they got a case. So if your information is submitted and they don't see a true FCR violation that they know can get you a win, they're not even going to take you on as a client. They'll let me know, hey, no, this doesn't fit, it's declined. Oh, this is approved. Let's move to the next step. So it's a lose-lose because you're not out of pocket. They're not going to take you on as a client unless they know they've proven to have seen an FCRA violation. And now, however long it takes for them to go through the proper litigation time frame, you end up with $1,000 plus or $2,000 plus off of information that was improperly reported on your credit report. So this is almost like getting something for nothing per se, because you don't have to do anything but follow the steps. Text FCRA to 744-3866, and I'll get the ball rolling for you to see if you are amongst the millions of people who qualify for this type of payout due to the violations that are on their report. I will allow for questions to take place, but I wanted to go through this pretty fast, but also break down the simplicity of what the FCRA was, in addition to the top 10 items that you may already be familiar with, or you may know you've seen it on your report before, and you just didn't know that it can turn into not only it getting deleted, that'll come with it. Not only in it benefiting and boosting your score, that'll come with it, but also you getting paid out.